Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, we're going to be talking all about gold. Yes, and we will try and find out whether 2024 will be a year when gold will glitter more than what it did in 2023. And should you invest more in gold versus equities is something that we will also try to find out. Joining in on this very special edition, I have two special guests, Navneet Damani, Head of Commodity and Currency at Motilal Oswal Financial Services. Also joining in is Vandana Bharti, AVP Commodity Research at SMC Global Securities. Welcome Navneet and welcome Vandana, and Happy New Year to both of you. And thanks a lot for joining us on Business Today TV.
Thank you, Sakshi.
Thank you, Sakshi.
All right, so let's start off. I think you guys are the best people to find out from whether gold will outshine other asset classes in 2024. There are several reports that are now hinting at perhaps, a figure of over 70,000 orders. So looking in on gold, we're currently at around 62, 63,000. There are some estimates even higher at 74,000 coming in. So, this is the time when we want to find out whether gold will be reaching that high level, and then what does it mean for investors? Should one go ahead and grab this opportunity to invest in gold at the current prices or not? So Navneet, let me first start by asking you, first wrap up for us, how have gold prices performed so far in the last year, and now what is the outlook that you have on gold?
Well, 2023 was a very interesting year for gold. We started on a very positive note. We started on a 12-13% gains in the first couple of months, and then most of the gains faded out as we approached October or November of 23. Then came the Israel-Hamas war, and within a matter of 1 week, we saw Fed coming out and talking about rate cut expectation and the possibility of 3 rate cuts in 2024. Both these events led to a sudden spike or rebound in gold prices, where we see them inching towards closer to lifetime highs on the international as well as on the domestic front. Now, most of them, if you see a 5 year perspective, Shakshi, it has been a year that gold has given you roughly around 50% returns in a 5 year block, where 1 year has been a negative return of about 3 to 4%. So, on average, gold has been rallying about 14-15% each year. And back to back 14-15% each year gives us a comfort that maybe 24 could also be on the similar lines. But we have a slightly different view. 24 is going to be a little more uncertain than what we've seen in the last couple of years. Now we are going to have elections in about 42 countries across the globe. Three large nations, India, Russia, as well as the US, are due for election, which is going to be keeping the markets under check. Secondly, we have Chinese economy, which was under the lull for say, maybe for the last 3-4 years. So could be a possibility that you see a rebound in Chinese economy. That could be another factors to look out for. Japan has been trying to tweak its yield curve, and after maybe a couple of decades of attempt, we see that some bit of positivity coming in 2023. So if there is something to catch up in 2024 also, then gold demand could be a little slightly subdued than what market is anticipating. And to top it up, Fed has indicated a possibility of 3 rate cuts, but the market is pretty ahead of what the Fed thinks, and market is trying to factor in 4-5 rate cuts, maybe 6 rate cuts also at best. So if that is not delivered, if the tone slightly changes from the Fed's angle, that is going to be a little negative one. So amidst all this uncertainty, 2024 looks to be a little volatile year as far as gold prices are concerned.
Okay, it looks like to be a volatile year as far as gold prices are concerned. Vandana, what is your thought on gold and how the outlook will be for 2024?
Yeah, hi Sakshi. It was very detailed discussion by Navneet. So I just like to carry some points here that in continuation we have seen 3 yearly upside in gold on MCX. If we talk about comics, it was second consecutive year in which we have seen positive return in gold. So we shouldn't expect that the same type of return can be depicted in 2024, because in 2023 we have seen 12%, more than 12% of return in gold. On comics it is 11%. So some positive triggers are here. We are carrying the burden of two wars, that is like Ukraine and Russia and Israel and Hamas. So at least it will carry some war premium in gold. Of course, 3 or 4 rate cuts are expected, but yes, with some hiccups, we are expecting that it should start in second half of 2024. So that will be the time period when we see some aggressive buying in gold coming in. And in first 2 quarter of this 2024, I'm expecting a dull time period for gold, where we can see some kind of correction or consolidation phase for this commodity. But of course, physical buying will improve, because in international market, we're expecting that it shouldn't go down below the level of $1950. Upside is kept near $2250. In MCX, I'm expecting that it shouldn't go below the level of 58,000. And yes, that will be pretty attractive buying levels for physical buyer. Yes, of course, apart from that, that's physical buying, central banks will keep buying gold as per our expectations, and that will keep add on some premium in gold prices. So yes, it would be a moderate year for gold, where we can expect a return of around 7 to 8% in the prices. And of course, we are giving the target of 68, 67 to 68,000 in gold. In international market, we are expecting that $2250 should be the upper side in gold. And yes, buying at dip should be the strategy for this commodity. And how dollar index and US Treasury, US yield will perform, that is really going to give the impact on the market. Of course, China is one of the factor. And in dollar index, we are expecting some kind of downside of around 98 to 97 point this year. So again, it will attract some buying in gold, but the major buying should come in the second half of 2024.
Okay. Navneet, there is one more point that I wanted to discuss with you, since you also talked about uncertainty here. David Einhorn's Greenlight Capital has actually upped its stake in gold. In fact, the recent reports show that the SPDR Gold Trust, which is the world's largest gold ETF, gold-backed ETF, and you know, this hedge fund manager David Einhorn has increased the stake here to over 89%. So he's holding up more gold, and he's uncertain about equities. We've seen an excellent year for equities pass by in 2023. But a lot of analysts have also been now worried about the valuations at these toppish levels. Do you think then, when one compares equity versus gold, gold has a brighter chance perhaps to provide that extra hedge to investors' portfolio in 2024?
Well, I am not an equity specialist, so I'd refrain from commenting into what equity is going to do. But of course, the house view is pretty bullish on equities as well. That's what I can comment on. Now, that's an individual call that the analyst is taking, that what kind of exposure he wants into gold. And as I mentioned in the previous stance, that there is going to be a lot of uncertainty. So, in regards of what is happening in gold or what is happening in equities, uncertainty is going to be the nature of the market for 2024, and that could be on the positive side as well as the negative side, because people tend to generally overreact to certain investment decisions in terms of these kinds of uncertainty. Now we've had a massive run up in equities, as you mentioned, and reasonable amount of returns has been there in gold as well. So both these asset classes, along with that, you see that real estates have given you reasonable returns in the on the domestic front. Bonds and FDs are giving you reasonable returns. So generally or historically, I would say that both all these things rallying at one point is not a great sign, and some of it will have to cool off in the first or second quarter of 24. Now, what is going to be that asset? I have no clarity on that. But whatever happens in any other asset, there is a cascading impact which comes on to gold. So as Vandana also mentioned, that I also feel that maybe first or second quarter of 24 could also be a lull period for gold, and you'll get better entry and better bargains level for what we are currently seeing. We
Okay.
also hold a similar view of maybe 67,000 on the upside or $2,200 on the upside for gold. But at current juncture, we would refrain from being aggressively long on gold.
Not being aggressively long on gold, you expect 67,000 on the long side at the max, but do you also expect some corrections in the short term?
Well, that's what our stance is, that maybe or second quarter you might see a reasonable correction, maybe towards $1,950 or towards 60,000 levels or below for gold. That could be the right entry point for a 10-12% upside vis-a-vis buying it here for a 4-5% upside. So if one has to invest in gold, he's got maybe 2-3 months or maybe 6 months also to plan his investments, that for a better entry level.
Okay, Vandana, your take, what would your expectation be on the gold prices, say till the year end 2024? What are your expectations? How high do we see? Because I ask you this because 67,000 is Navneet's target, but we are seeing some super bullish reports coming out on gold. They're expecting 74,000 on gold, 72,000 on gold as well. What would your personal take be? And in case you'd also have such a high target, then what is the best time to take an entry in gold then?
See, ETF buying could be a strong trigger. If you remember 2020, physical buying was almost nil, and it was ETF buying which prompt gold prices on higher side. So if it happens, then it will add some extra upside in gold, and maybe we can see 69, 70,000 kind of level. And since last few years, we have seen outflows, ETF outflows in both gold and silver, and accordingly, like these commodities, they had the limited upside. But if ETF buying is happening in 2024, certainly it will add some boost to the gold prices. If we consider the equity market since 2019, what I have observed that it is reacting sharply on the performance of equity market. But yes, 2023 was is an exceptional year where we have seen that okay, Nasdaq is giving the return of 36%. Despite that, it was return of around 11% in gold. So equity and commodity simultaneously, they are giving a positive return in the market. So there is no more a big strong connectivity between these two asset class, because it is still acting as a insurance of portfolio, and people, they are investing their money. Even central banks, they are aggressively buying in gold. So yes, equity is one of the trigger, but it is not the major trigger for gold right now. What I'm expecting that if war happens in other regions as well, like in Middle East and other countries, then it will add some more premium here. And in domestic market, if INR is going to touch 85 or 86, it will add another premium in gold prices. And for 2024, I would like to stick to 68,000 only, because I am not over optimistic in gold. And sometime in in first quarter or second quarter of gold, I'm expecting that the price will return towards the level of 60,000 to 59,000. There we can see the aggressive buying coming in ETF buying as well as in physical buying.
Okay, fair enough. Navneet, now let me come to you. What would you advise, since you're saying an opportunity over the next 3 to 6 months, or when there could be a correction, to take an entry in gold? Which is the best form of investment that you're going with for 2024 in gold?
Well, the best form continues to remain sovereign gold bond, but as I previously also mentioned, that sovereign gold bond has a issue of lock-in. Maybe 5 years is the minimum lock-in, and 8 years is the lock-in where you need to hold it. And secondary market sales are also not very lucrative, and maybe you have to sell it at a discount. So that is a couple of there are couple of angles where one should consider if you want to park in for say maybe 5 to 8 years. The second best option could be buying it on the ETF, and the ETFs, gold ETFs are pretty prevalent and pretty liquid on the market. You get an option to buy from 950 to 330, and you can choose which one has the best uh, IRR over the last 4 5 years, along with the best minimum charges from the fund manager. So that is one of the options that you can look at. And thirdly, one could be looking at investing into gold funds or probably having a derivatives position on the MCX.
Okay, Vandana, what would your take be? The best form of investing in gold in 2024?
I would rank it according to the duration of investment. So my choice is SGB, of course, because if we consider the 20 years of CAGR, it is 14% for Nifty, and it is around 11.2% in gold. So fair enough, it is a very good return. And icing on the cake is 2.5% of that interest on gold. And third thing is that LTCG part. So yes, this is my favorite tool for long-term investors. But yes, those who want to trade on the swings on gold, ETF is fair enough. It is a very good tool where you can enter. And yes, with some liquidity, if it comes in gold options, then options could be another options for investors, traders here. So 2024, I would rank like it as SGB, ETF, futures, options, then futures.
Okay, got that. But Navneet, since you both have mentioned somehow as one has to really look at the time duration and then decide where exactly one should be invested, what exactly is an ideal time to hold gold? What do the historical trends tell us? When do you really get to maximum or maximize your optimum returns in gold? So can you tell us, if you also have done your research, the best time to hold gold for a duration, Navneet?
Well, gold typically works in cycle, and every 4 5 years you have a cycle which gives you about a return of 40%, 45%, and then you see a couple of years or maybe 3 years of lackluster moment. So we are maybe at the peak of the cycle or just 1 year away from the peak of the cycle before we enter the consolidation phase. As we discussed, 2024 is likely to be very volatile. So there could be abnormal returns or there could be no returns at all. Both possibilities are pretty open. I would like to, our wealth division has a certain study on it which indicates that maybe a 8 to 10 year horizon is minimum what you should be looking at to invest in gold, and which gives you about 11% CAGR on an annualized basis. As Vandana also mentioned that we are not better to equities in a 20-year time frame, but we are not worst off also. And this is just one asset class that you're investing, which is giving you about 11 and 11.5% kind of CAGR over the last 20 years. So minimum 8 to 10 years is a time horizon. But we can split it into two parts. One could be an investment for 10 years. Second could be a tactical investment, which we just discussed that if price is correct towards
Yeah.
60,000, then it's an opportunity to garner a quick 10-12% returns over the next 12 months. So that could be a small tactical investment also that one could be looking at.
Okay, fair enough. All right, Vandana, I'll just come to you now and help our viewers really understand when it comes to investing in the physical market. What are the trends that you're looking at for 2024? Because a lot of investors still go ahead and invest in physical market in India, although these newer forms of digital gold ETFs and mutual funds, they're picking up pace. But a lot of investors still go ahead and buy physical gold. Where do you see the trends shaping up? Is it going to be more for gold bars, coins, or is it going to be jewelry again?
See, first we have to look at for that hallmark. I always suggest to go for that hallmark jewelry or whatever it is, coins or bars. Just go for hallmark. This is the first priority. Second is that in recent years, the buying of bars and coins, it has increased in India as well. If you want a peaceful life, just go for jewelry because apart from making charges, it is going to bring happiness. And in futures, you have gold with you and you can use it in NB wherever you want if in time of in bad time. And
Sure.
second thing is that just go for buying in tranches and expect a correction in the first half of 2024. There
Hmm.
you can get a value buying in gold and start buying. If you want to do a sip kind of thing which jewelers so they are offering, you can go for that also, because in 11 installment they pay the 12th installment and you can
Yeah.
go for that gold buying. It is an attractive scheme for for physical buyers. So these are some schemes there where they can go and buy gold. But just keep in mind that you should go for hallmark jewelry, hallmark bars and coins, and go for pure gold because it is everywhere in India now.
Okay. Navneet, let me just now take a step forward. Apart from gold, I also want to ask you about silver as well as an investment opportunity. So in 2024, you expect 67,000 rupees odd kind of targets on gold towards the latter half after the volatility. In silver, what are your expectations? And does silver also make a case for a good investment bet for 2024?
Well, the show would have been incomplete if we missed talking about silver actually. So now coming to silver, we've seen reasonable returns over the last 2 3 years in silver as well. But vis-a-vis gold, the returns have not been comparable. Gold has outperformed silver in the last 2 3 years. Our bet is that China could see a hockey stick kind of recovery as we approach, say, maybe second quarter, third quarter, or fourth quarter of 2024, and that is when silver is likely to come into action. Most of the industrial metals look a tad positive than what they delivered in 23. So along with them, silver is likely to have an outperformance. Our target for gold has been about a 10% upside from 60,000 to 66, 67,000. But for silver, we continue to remain strongly bullish for targets of 85,000 and 88,000. which is about a 20% upside from current levels also. So we remain strongly bullish and positive, and would recommend any major correction or dip towards 70,000 to buy silver. One could look to buy it in form of gold, silver ETFs, or in physical format, whatever works.
Okay. Vandana, your take on silver and the outlook on prices that you can share with us?
Yes, actually, I remember that when gold was launched on MCX, it was 5,800. Now it is near 62,000. Silver was somewhere around 7,800. Now it is near 73,000. So yes, we are talking about since last many years that okay, industrial buying is going to overtake the investment demand in silver. So now that trend we have seen actually in 2022, where the demand was surpassed that supply side of silver. From there, we have seen an uptick in solar prices. And yes, 5G, solar panel, clean energy talk, and it is used in RO and everywhere. So yes, this is going to be a good year for silver. And one concern is that the scrap of silver is not available as it is in recycling is available in gold and copper. So this is another concern for the supply side. In 2024, if ETF buying in silver improves, we can see around 85 to 88,000 kind
Wow.
of level. Here I can give a higher target as compared to Navneet. My target is of 92,000 in 2024, or somewhere in
Wow.
first quarter of 2025 for silver, because I am bullish. Supply side is decreasing and demand is increasing, but at the same time we should remember that it has more void swings as compared to gold, and it is more volatile than gold. So we can see a higher sign in silver. All of a sudden we see also the sharp downfall. So just keep in mind a trade with stop loss, or
Okay.
frequent churning is required in silver.
तो सुपर बुलिश टारगेट आ गया। 1 लाख रुपए का सोना ये सिल्वर हो जाएगा क्या जल्दी? आप ये कहना चाह रहे हो?
92,000, 92,000,
92,000
1 lakh is
2024 में होगा,
psychological level.
फिर 1 लाख 2025 में हो जाएगा।
Continuation, I don't know.
I
It's
think
going to
Navneet is
be
agreeing.
yoga.
Navneet is
Yeah,
saying
yeah.
yes.
We largely agree that 25 maybe we'll be seeing about 1 lakh rupees plus.
तो 2024 में 100% silver is outperforming gold, and by 2025 it is going to touch 1 lakh.
Nothing is 100% in the market, but yeah, these are largely estimates that we expect.
Yes.
Everything in silver depends on how sharp Chinese recovery is going to be. If they falter this year as well, maybe what we are anticipating might not hold true. But largely, we believe that after a couple of 3 years of lull period, this is the year when China could actually deliver and our targets could be met.
So
I agree.
between silver or gold, if somebody has to choose, you will tell them for investment purpose, silver is a better choice.
No, for
Yes.
tactical investment, silver is a better bet. For a long-term investment, gold definitely will remain a bet.
Okay, Vandana, your take?
Gold has more stability, so I'll go for gold for long-term investment. Silver is for short-term investment. And yes, we have beautiful product with our market, and that is silver ETF. With a small amount of 100 rupees, you can go for buy in silver ETF. So this is the beautiful product. We should use that.
Wonderful. All right, on that note, thanks a lot, Navneet, and thanks a lot, Vandana, for sharing such wonderful insights with all our viewers. Clearly, it's good to be an uncertain filled, kind of a space for gold in the first half of the calendar year. The second half of calendar year could actually see the gold prices surge. 67,000 to 68,000 rupees is the kind of trading range that one can really look at which the gold prices could surge to. But it's silver that could outperform in the shorter period of time. So if you are a tactical investor, which means that if you want to invest in a shorter period of time between these two commodities, precious metals, silver could give you actually better returns. But in the long term, stability wise, it's gold that actually performs better and also provides a better hedge against inflation to your portfolios as well. So with that, we will wrap up this special edition, but do stay tuned on to Business Today TV as a whole lot of conversations, information continues from the world of business and stock markets for you on the other side. Where exactly should investors be focused on? You did see some of the underperforming sectors coming in forward. How are you going to be deploying